All right, so yesterday afternoon, management at IBM told Yahoo Finance that the company has been investing in code modernization for years, both through skilled initiatives and through our own generative AI capabilities. I don't know. It just really, the whole thing smacks of desperation. But they're not the only ones, right? Company after company, they're issuing such statements. I want to bring in now B. Riley Wealth Managing Director, also Chief Market Strategist, Art Hogan. All right, so Art, IBM up a couple of points on that statement. Doesn't seem like the market's convinced. I mean, it's just amazing to me because this is a PDF that took down IBM, and not a new product, a PDF. By the way, it's not new. It's been around for a long time. It was behind a paywall on Anthropic. They put it out on the email yesterday. What's happening?
Well, I think that the fact that you and I are actually talking about IBM and COBOL and people were selling it because Anthropic was somehow going to replace that, I don't know that anyone that had a sell ticket for IBM yesterday because of Anthropic talking about COBOL knows what COBOL is and knows how long IBM's been working with their own AI strategy to move that code to Java. So overreaction, yeah, just modestly, but that's the fragile market that we're in right now. You know, everything is shoot first and ask questions later. Anthropic's going to destroy the world, and IBM's going right along with them. They've been working on artificial intelligence with their Watson program for much longer than Anthropic was even a glint in someone's eye. So to the extent that IBM understands the transition of the COBOL code, certainly it's going to be something that they're going to have more news on. But yeah, yesterday's reaction and something slipping out that was behind a paywall for weeks. To have this kind of market reaction is obviously ludicrous.
So my follow-up is this. What happens to the efficient market hypothesis, right? I used to have this argument with Ben Stein all the time. And his thing was like, all the information that's out there is known to the markets, but we know these whipsaws sort of belie that notion, but it's happening now, right? If the market knew, then there wouldn't be these sort of reactions. Or where's the disconnect with this particular market that stocks and industries can be crushed at the blink of an eye?
Well, I think what's happening right now is we're in a fragile market with players on the edges that are looking for every story about something that's going to be disrupted. And we've seen that for the last 3 weeks, right? Whether it's, software writ large or whether it's software and financial services because there's a new tax program that's out, certainly travel, certainly the trucking and logistics. So it's kind of a whack-a-mole. Every day there's a group that kind of playing seek and hunt and trying to find that next industry that they can go after. And until the dust settles, we realize that artificial intelligence is probably going to make all of those industries more productive and better. So I think that's the fragility of the market we're in right now. We get these massive overreactions. I think that at some point in time, calmer heads will come in here and say, wait a minute, artificial intelligence probably helps, doesn't hurt everybody.
Well, to that point, HSBC put out a report, a really interesting report. Software will eat AI. Are you buying that?
Yeah, interesting. Well, to the extent that what we saw with Anthropic and some of the deals that they announced with some of the software application levels, artificial intelligence is going to only be important to us individually and at the enterprise level as it appears at the application level of software. So it's not like we're going to have a bunch of chatbots that are going to make our businesses more productive. It's going to be at the application software level that we're going to actually infuse artificial intelligence in, both individually, you and I, and at the enterprise level. So if that's the point that they're making, I could wholeheartedly agree with that. Artificial intelligence isn't going to kill software. It's going to make it more productive.
So I know you still like Apple and NVIDIA. I've got less than a minute to go, and I just want to ask you about Oracle. Oracle gets a periodic upgrade. Almost every week I see 1 or 2 firms upgrading the stock. Every now and then it makes a move higher. But it still feels like there's something, there's the gravity on Oracle still worrisome to me. Why are you sticking with it?
Well, I tell you this, it's on a valuation basis, it stays in there nicely. The problem with Oracle, and it sort of sits at the tip of the sword of, are we spending too much money chasing the artificial intelligence dream? And are we doing that at a free cash flow, or are we raising a lot of debt? And Oracle's the poster child for having raised too much debt to chase this dream. So that's why every time it seems to lift up its head, it gets knocked down again. It's that CapEx question that we started at the beginning of the year with. Oracle kind of sits at the pinnacle of that. We're raising a lot of debt, and oh, by the way, this is going to turn into a lot of revenues in the future.
All right. Hey, Art, thanks a lot, my man. It's never a dull moment. That's why I think we picked the right career. Thanks a lot. Appreciate it.